Welcome to the Hedgineer Podcast, hosted by Michael Watson.
Hey everyone, and welcome back to the Hedgineer Podcast, Season 2, Episode 1. Pretty excited to kick off a new season where we dive into AI, technology, and data in the hedge fund, asset management, prop trading space. And so building on last season, we're bringing back one of our favorite guests, Thomas Lee, co-founder, CEO of Daloopa, to talk about what's going on with the company since we last spoke. They just had an awesome announcement with Anthropic FIS. You see kind of their logo everywhere. They're also available through OpenAI. And the product seems like it's really just kind of taken off since we last spoke, which is kudos to you and the team. For people that don't know, Daloopa is kind of cemented itself as the highest quality data source of company GAAP and company-specific financials and KPIs for historicals. A lot of analysts will use the Daloopa models for Excel when they're just building out coverage for a name or when they're looking for bringing in new names for comps. And they have a great portal where a lot of the stuff is normalized, and a lot of the long short pod shops are adopting it pretty extensively. So kudos to you for getting that kind of penetration, but also it seems like it's gone to the next level since we last spoke. We'd love to hear a little bit more of an update. What's changed since we were talking about a year ago?
Yeah, I think thank you for the intro, by the way. That was an incredible intro. I think we really just kept focusing on what we care about, which is data quality. At the end of the day, my customers rely on me for three things: accuracy of data, comprehensiveness of data, do you actually capture everything, and speed at which you capture the data. So we just kept doubling down on that. We grew our coverage. We increased the speed at which we capture data. What used to be hours and minutes now becomes minutes and seconds. And we just kept pushing the frontier on accuracy. We just never gave up. We were over 99%. Now we're well over 99%, 99.9%. And we'll just keep pushing the boundaries of what's possible. But as a result of gathering a database of deep fundamental data with no errors, turns out there's a lot you can do with it. So standalone, the way we thought about the delivery of our data was the mechanism of delivery was through an Excel add-in or through Excel files, because that's what our customers use. And where that was very powerful was the ability for us to say update a customer's models or provide you with a comp sheet on the fly. And there was a lot of value there because you were helping customers with parts of their work that they didn't want to do. But turns out that there was a big data problem as it pertains to AI agents. So if you went to, OpenAI, Anthropic, Claude, whatever, today and just used the free version and asked it to do financial analysis, you end up getting a bunch of hallucination. The analysis is still there, the logic, the thinking, it's all there, but the numbers are wrong. And what happens when the output is wrong is people stop using it. But you don't stop using ChatGPT because the output from a financial question is wrong. You just stop using ChatGPT to solve a finance problem. So you don't think of people stop using ChatGPT or Claude to do financial analysis, model creation, deep dives, comprehensive summaries. You don't do that. What you end up using it for is your administrative work. And you see a lot of that. You see people summarize emails, write emails, summarize earnings call transcripts, a lot of the same things you would expect out of any other white-collar jobs, but not the finance-specific thing because of this hallucination problem. But if you plug the Daloopa database into a large language model and you tell the large language model, hey, stop going to the internet where you go and hallucinate, stop generating numbers where you go and hallucinate, just go grab from this database. And when you do that, it removes hallucination. It's the same as imagine if you're an analyst and you are writing a piece of research. The way you write research is you open up Word and you start writing, right? You generate a bunch of prose based on what you know about the business, based on what you think. But when it comes to the numbers section, you are rarely generating numbers. You open up your model and then you copy and paste the numbers out, right? Because you know that if you copy and paste the numbers, it's going to be right. And you know that if you were to just open up a table and you start typing, it's probably going to be wrong. You're just guessing. So it's the same thing, right? Instead of having Claude or ChatGPT go and generate the numbers, we're telling it to orchestrate the flow of creation of analytical research generate where it needs to, but when it comes to numbers, go to Daloopa's database, grab the data, and put it in. In that process, you remove hallucination. And I think when we first started working on being the data piece of a finance agent, we realized that, it's pretty neat that you can now use a large language model. You can use Claude or ChatGPT to pull data from our database. That's pretty neat. But turns out our customers took that and just went off with it. Because extracting data is a very simple task that you can have it do. But what happens is when you remove hallucination, all the finance workflows get opened up. So we saw customers go out and start building super deep research pieces, right? Initiation reports. We saw our customers go out and write sell-side morning notes, earnings summaries, because companies report at 7. Let's say, we're in the middle of earnings season, 150 companies reported this morning. And if you want a summary of 150 earnings reports from a human by 9 a.m., it's just not feasible. Right? Who's going to read and open 150 models by 9 a.m. and just tell you what's going on? But you can have an AI do it, because our database is now updated. So by 9 a.m., you can generate this earnings summary. And as a sell-side bank, you can take that and send it to your clients. And your clients get this 150 companies summarized earnings report before the market open from 7 a.m. to 8 a.m., right? So we saw customers doing all sorts of crazy things. We saw people say, hey, I want you to take all of my companies, run a DCF and an LBO for every single one of them, and tell me what the implied probability is of a takeout risk, right? How many of these companies are quote unquote private equity LBO candidates? Why does it matter? Because, if one of them has a high takeout risk, maybe you want to scale down your short or something, right? So we started seeing people really take because it doesn't hallucinate concept and start building into workflows that are traditionally only done by financial analysts. And so what we want to do is we want to be able to build products and data pipelines where we can power into workflows that historically you didn't even think was possible, that could be done by AI. And today we want it to be fully done by AI.
Awesome. And what I take away from a lot of that is that the workflows you're describing are the same workflows that are already happening. Like, you still, as a PM, want your analysts to be able to go into their coverage and be able to sort rank what names have the highest possibility for a leverage buyout, or be able to go into a new day's earnings and say, what are the comps and how did they report yesterday, to know what that actually translates into current positioning or similar names.
Yep.
But you just only have so much time in the day. Now, if the AI is using it, it's accessing the same data that the analyst would otherwise be going and be using. They're still going to go into a Daloopa model, iterate over every single one, and be able to summarize, but they just don't have the time. The AI then just scales that.
Yeah, there's also this element of yes, there is stuff that you don't have time to do, but there is stuff that you just would never have done because it would be unreasonable to even attempt. So this morning I was on a call with one of these big PMs, and he wanted to test something out. He said, hey, look, the market's about to open. I already know what my analysts are telling me in my coverage, but I wonder how much else I would like to know. And the big topic right now is tariffs, right? People want to understand what the impact of tariffs are on not only their names, but all the names outside of not just their coverage, but not even in their industry. Mm-hmm. Because the way tariffs will impact a consumer company, a tech hardware company, is relatively similar. But a consumer person is not updating a tech hardware model. But what these guys are basically doing is they're saying, hey, I just want to summarize for tariffs, what did everybody say? Mm-hmm. And not just what did everybody say, what do we see in numbers? Mm-hmm. Were there any beats and misses in COGS that tariff was the main contributing factor? And what was that like? What did the company say? What did they call out? And can you assemble a tariff-based report for me before the market opens on every mention and every data type category of tariff this morning? That was an exercise you wouldn't have done before this.
Totally.
Because how would you even know which companies to look at? Right? Too many companies were reporting, every 2 seconds a company's reporting earnings. But now, you're walking in with this full knowledge of hey, I sort of know where the weak spots are, and I know where tariff actually isn't impacting as hard as people think it is. Mm-hmm. So yeah, that was this morning, and I was sitting there going wow, that's a cool use case. Never thought about it.
The one thing I've generally assumed is that the scale that you get, it does allow you to think faster, but also think smarter. But a lot of these pod shops, they'll have multiple desks that are going to be in industrials, multiple desks that are going to be in financials. And if you're a financials PM, you can't necessarily go over and go into tech, but there might be an overlap there. That the scale that you now get from maybe like what junior associates would do or maybe an analyst would do as a PM with something like, not necessarily only pushing Daloopa, because there's a lot of really stuff out there, but the way that you could have language models start orchestrating access to multiple different data sources, not just one, and scale this horizontally allows you to increase coverage, be able to have multiple sectors that you potentially could be covering at the same time and start crowding out some of these like almost overcrowded manager models where there's just so much density in like the same name, and having one PM that could theoretically manage what previously 3 or 4 desks would cover before. And how you see like the pod model starting to get disrupted where you have one manager having a much larger coverage than they otherwise would be able to have.
So I can see that. I don't know if I necessarily agree with that, because the pod model doesn't, there is a number of names that you need to get to be successful, but I don't think it necessarily rewards you for having more names. I think it certainly will, because the way I think about the pod model is you take number of at-bats, multiply by dollars P&L deployed, multiply by hit rate, multiplied by slugging is basically P&L, right? So that equation is pretty rock solid. You can increase at-bats to increase P&L, but increasing at-bats isn't always a function of increasing coverage, right? Going from 200 companies to 300 companies, sure, you have another 100 companies to farm ideas from, but being deeper with 200 companies could also increase at-bats. Finding more connectivity of what's going on with these 200 companies could also increase at-bats. For instance, let's say you're an airlines analyst, and historically all your at-bats were attempts at understanding market share shifts between the major airlines and route shifts, and you're really, really good at that. And that gave you, let's say, 10 bets a year, right? And now you want to take the airlines industry and make 20 bets a year. But in order to do that, you now need to be able to find out how airlines are getting competed with or against by any other type of transportation, like how a train is disrupting, the short flights, how is traffic pattern disrupting the way like the short haul flights are moving. And the way you have to do that is to run analysis and comparability on industries that you don't cover or you have no insight into. But if someone's now able to give you that insight, you can have more at-bats on airlines than you previously did because you have a different way of looking at the same companies that you know so well.
Mm-hmm. I would also like to think it improves the hit rate at the more at-bats. Like if you can go deeper into a name that you previously didn't have expertise, not just as a read-through of a name that you cover, but actually as a name that you might actually want to explicitly cover because you don't necessarily need to have the level of depth, because you could reverse it, right? Like you have the read-through to airlines, but you could also say, well, how is airlines going to affect the demand for the upstream?
Yeah, I actually had a recent conversation with a customer about this, and interestingly, I don't think it will affect hit rate, even though it seems logical that it should impact hit rate. But they did an internal study, and very, very few things actually changes hit rate. The reason is hit rate, you almost don't want the hit rate to be too high, because let's say push to the logic extreme, right? Let's say someone came to you and says, I have a hit rate of 100%. I bet 1,000 every time I invest. Then naturally, she's probably not investing enough, right? So there is sort of like this happy medium of where you want hit rate to be, but what you really, really want to push the limit on is slugging, right? You want to be able to say every time I hit is a home run. Right? Singles are great, but you know what's better than a single? A home run, right? So how do you take an idea and build so much conviction around the idea, take a long or a short and build so much conviction around it that you say, this is actually a home run, right? There is a share shift, let's say, hypothetically, just use the airline example. Delta is a premium carrier in the U.S. They have the highest RESM. It's been true for a long time. Let's say United goes out tomorrow and says, I'm going to take that market from Delta away, or I'm going to push into that. but how would you know if they're successful or not, right? How do you track the changes in the type of lounge they provide, the type of service, the experience, the routes? How do you track all of that? That requires a holistic thing. If you say, hey, I have evidence that United is catching up to Delta in terms of that, and we'll see it in RASM next quarter, plus I have evidence that your cost base is coming down from fuel because I have all these energy data, plus my analyst is telling me that the street is mismodeling, and I have all of that, I can build massive conviction around the quarter. Right? That's how you really change your slugging, because what then's going to happen is, let's say they beat and they only beat on fuel costs. You now sit there saying, well, the quarter after that, they're going to beat again because they're going to beat on RASMs. That's an even bigger beat, right? So you can now hold a position into a much bigger slug. As opposed to before, you take your beat, you go home, you clip your 8%, and you move on to the next at-bat.
Well, in the model where, let's say, it doesn't affect hit rate, more at-bats, higher slugging, that you don't want to have a diluted slugging ratio by having multiple people covering the same name. You want that concentrated in your one single bet that has a very deep and holistic understanding. Love it. And so for people that aren't as familiar, hit rate is the percentage of investments or trades that you make that are profitable versus not profitable. And slugging is the average profitability per investment that you make. So if your hit rate is relatively low, but your slugging is very high, that would compensate somebody that has a high hit rate, but their slugging, because they're not taking very much risk, is relatively low. And then at-bats is the number of active investments trades that you're making. And a lot of that was driven from your old shop at Point 72 with Steve Cohen. And it's a common terminology that's used across the industry at this point.
Yeah, I mean, there's people obviously know, Steve Cohen loves baseball. He's proud owner of the Mets. So baseball terminology is not lost in his firm, obviously. But you're right, it's absolutely everywhere now. I think most people think about it that way, because it's very similar. Like, the sport of baseball is so similar to like investing in terms of how you think about everything. If you had a batter who's going to bat 1,000, he's just not swinging.
Right.
Right. Because if you don't swing, then you can't miss. But guess what? You also can't score points.
So going back to the partnership that you guys have with Anthropic FIS, Anthropic Financial Services. I think it came out like 2 weeks ago, and Anthropic's been dropping like a couple of these new product updates. They had like Anthropic Next, where they were pushed down Anthropic Claude Code, which is awesome. Love to touch on that for a little bit. And then like 2 weeks ago, they came out with almost a product vertical specifically around financial services. And lo and behold, it's not just Anthropic FIS, it's Anthropic FIS. And like the first logo that they put out there is their integration with Daloopa. And I'm sure a lot of people that were customers, fans, friends were all like, dude, Thomas, that is awesome. I'd love to hear a little more, like, how did that come about? Like, how do you, as just an entrepreneur, but also a person that like really cares about the space, trying to push forward with AI, cultivate a relationship like that?
Yeah, I think it was serendipitous. How we got introduced was, a mutual friend basically introduced me to the team there. But how we actually managed to go through the process of working together was a deep appreciation on both sides that we had a lot of commonality in terms of how we thought about the world. At Daloopa, we care intensely about the quality of our data. They like that a lot. They firmly believe that in order for a vertical AI agent to work in this space, data quality is unquestionable. If you don't have data quality, then you might as well use the free version. So that was that view. And we obviously like to work with people who understand the importance of what we do. What we liked about them is they are very focused on solving vertical problems. So as opposed to thinking about what can AI do, they are sitting down with us, talking to actual customers. We had a whole team of customers that I'm internally grateful for who beta tested the heck out of this product. Even when it barely worked, they were there with us. But the idea was we were asking customers very simple, basic questions to them about how this would change their workflow, how will we make this better. And we had a lot of patient customers who were just there explaining to us little things about how things need to happen, things don't need to happen. 30-minute conversations became an hour-long conversations became 3 hours. And we just had a lot of those sessions together. And it was marvelous to me that a business is growing at the rate Anthropic is willing to sit down and go to first principles with customers and just really understand the vertical problems that we face today and not come in carrying assumptions. Because what you see a lot today is it's very easy to start an AI startup now because you just buy the API from ChatGPT or Claude and then you wrap design around and lo and behold, you have a really cool AI company. It's very easy to come up with hypotheses of what you can do with AI. It's much harder to verify those hypotheses, right? So at Daloopa, our entire philosophy has always been we will just solve customers' problems. We don't care about how it needs to look. If the customers don't care, we don't care about what we believe if the customers don't care. We only care about what the customers care about. And we want to work with partners who behave like that, as opposed to say, because AI is a super powerful thing, I think that this is how you should be using AI. But this is just not how, the buy side or the sell side works, right? You don't prescribe to them what you think is the right solution. Maybe you're right, but change management in this space is ridiculously difficult. So don't fight the battle if you don't have to. Listen to your customers. And I think it's really that alignment of interest and how we operate and build product that brought us together. That part was amazing. And we were able to align on the problems we wanted to solve early on because it's so easy to dream a big dream of what you can do. And frankly, I expected the people at Anthropic to want to dream like a massive dream, but they were willing to say, you know what? You can always have a 3-year vision that's massive, but if we want to launch a product in July, we've got to scope it down. So how do we create a set of evaluations where we can look at it and say, this is accomplished or this is not accomplished by this date? And so we could write those down, memorialize it, and give very clear instructions to the teams like, guys, this is what we're working towards. Yes, AI is going to change the future. We don't know what that's going to look like. But by July 1st, I need this. Mm-hmm. Right. So work on that. And that clear direction allowed the teams to come together and just basically execute. We were handling some tickets of theirs. They were handling tickets of ours. You just work together and get it done. So that part was really neat. The other thing I think the Anthropic guys liked about us, and we obviously like about them, is this fundamental belief that you don't have to be a closed ecosystem to provide good value to customers, right? Because our space is full of walled gardens, and they have been wildly successful. And it's easy to believe that the only way to succeed is to be a walled garden, right? It's certainly one way to succeed, but we're here saying, you know what? Our data is a very valuable asset. We want to be able to monetize it. We spend a lot of money to create it, but we shouldn't be the only people who gets to quote unquote sell the data, because my objective is to provide value to my customers. My objective is to accelerate the process in which my customers can make decisions. That's all I care about. If someone else can take my data, create a product that helps my customers accelerate decision making, who am I to stop that? So when I deliver my data through my own Excel add-in, what I'm doing is I'm automating earnings, right? I'm making it super easy for my customers to do earnings. What I am not doing is helping them do research. But if Anthropic can take my data and morph it using their AI into deep research pieces, then my data is helping my customers create more value. So the distribution channel of moving it into my own agent, which is an Excel-based agent, versus Anthropic's agent, which is a browser-based agent or chat-based agent, creates totally different workflow benefits for my customers, even though the data is the same. So by changing how the data is used and distributed, you can add more vertices of value to the customer. And that's all I want, right? My company's mission, Daloopa's entire mission, is to accelerate decision-making for finance. And that maps to our vision. That maps to our mission. That maps to our vision. We're going to do it. So they appreciate, I think, that part of us, which is we have a very strong mission that we want to march towards. And we are loose in terms of how we get there, so long as we can get there with our customers.
Got it. And so when I went in and I added the Daloopa MCP connection through Claude Enterprise, it looks like there are 3 main MCP tool endpoints you guys include. There's list companies, there's company historicals, and one other one. And just with those 3 endpoints, you're able to unlock a lot of the value of the product without building UX or without like redoing your Excel plugin. And customers are suddenly able to do all these use cases that they couldn't do before. So it's almost like there's less work to deliver more value. In some ways, I'm not trying to belittle the amount of work that it took to build out and integrate with customers and make sure the endpoints are correct. But like the value that it unlocks, it seems like it's significant relative to the effort that you put in.
Yeah.
How do you think about like what that looks like going forward? Like how do you start prioritizing new use cases? You said you didn't really help as much with research. You just want to give like really good, accurate data, but the opportunities to then have an opinionated way to use that data in the context of research, given like you've been in the space for a while, your ability to add context that is almost like distinct to the way that you see things and scale that starts presenting itself a little bit. So I'm curious, how are you starting to think about how you deliver value to your customers in a different or similar way after going through the last couple months of experience integrating with Anthropic FIS?
Yeah, the Daloopa's goal is always to meet the customers exactly where they are. So up until this point, we still don't really have a front end. Right? We have a website, but we don't really have a front end. We have a little bit of a front end, but not like a meaningful one, because our customers don't require a front end from us. They don't require a software product with knobs and buttons and integrations and all of that. They don't. They want to update their model. They want to build a model. They want to do analysis. They want to understand the world. That's all they want to do. And if Chrome can help you or Safari can help you get there, great. But in our universe, it more often than not does not help you get there. The model helps you get there, right? Talking to management teams help you get there. So our question is, how do we meet our customers exactly where they are? Which is why our first product was an Excel add-in, right? We live in your Excel models. We are an agent within your Excel models to do that. My belief is we might never build a web-based, like big web-based thing. We have obviously web-based things and capabilities to help our customers, but will Daloopa go down the everything is web-based route? Probably not, because that's not where my customers are. If they need to be in a web-based portal to view documents and view source and authenticate stuff, sure, we'll meet them there. But if they want to be in Excel, we'll meet them there. So for example, what is one workflow that happens today that is highly frustrating for a lot of analysts and nobody seems to know? It's the conference workflow. So anyone who's at a hedge fund will know that earnings season is brutal, but conference season isn't much better. Because what happens is you pack your little laptop and you hop on a plane. If sometimes you come to New York, if you're in New York, great. If you're not, you cover TMT, you go to San Francisco, Menlo Park, all sorts of places around the world. It's usually the same conference. It's usually the same time of the year. And you meet CFOs, head of IR, sometimes CEOs. And a lot of it is one-on-one conversations, two-on-one, three-on-one type conversations. And you are trying to take notes. You're trying to ask good questions and you're taking notes. And you're taking all of these notes and you're doing two things with them. The first thing is trying to digest what's going on so you can communicate it to the rest of the team. That's really critical. And the second is you're trying to take that and reframe your model. Right? You're trying to add a fine-tuned lens to like, okay, I think my revenue growth is a little bit high. Okay, I think I'm thinking SG&A a little bit differently from how CFO is talking about it. Maybe I should rethink that. You want to do it for all your companies every single quarter. That's conference season. Now, here's the challenge. You have all these notes. They are kind of gobbledygook, right? Because you're just sitting there, just slamming it onto your phone or just writing it on a notepad, trying to regurgitate as much as you can think back in your hotel room. You have this tiny little 13-inch ThinkPad X1 in front of you, and you're trying to do all of that work at night. You just met 7 management teams. The next day, you got another 7 to go. That's what I call a conference problem. In an ideal world, as you are taking those notes, you should have someone sit beside you and say, hey, I'm going to help you out. I'm going to tell you, based on what the CFO just told you, your SG&A number is slightly high. This is why it's slightly high. Hey, you heard about this tariff impact. Maybe you want to take COGS up by $2 million because, there was this one shipping that got delayed and got hit by tariffs. You want to be able to take all of that and flow into your model as you hear them. You want to have someone tell you, if you have flowed all of this into your model, here's what the new output is. And if sell side doesn't update it, you are now 4 points below, right? You might want to know that. and you're 4 points below with maybe high conviction or whatever, right? And you should also be able to have a summary done by this assistant that says, you've had 7 meetings today. Here's the commonality, and here's where it's different. Here's where they are different from each other, and here's where it's different from what the management team said on earnings 2 weeks ago. Because remember, earnings happening right now is for June 30th end. But when you go to a conference 2 weeks from now, we're in the middle of the quarter. So you're trying to triangulate what is the difference between Q2 end and the middle of Q3? And is that difference material enough for me to model something else into my model, right? That whole conference problem gets wrapped around the fact that you have a single 13-inch monitor to work off in, the Hilton somewhere in San Francisco. So to solve that problem, what you really want is an agent in your Excel, in your model, where as you are typing out the notes, it's able to just flow it into your model and give you suggestions. Not modify your model, but tell you, this is what you should do. If you do that, this is the change. Hey, the CFO just said this. For you to believe this, your models needs to have SG&A higher by 10%. Do you think it's realistic? That's really what I think AI needs to look like in our space down the line, right? What we call a true agentic integration into the workflow. Notice, no browser.
Mm-hmm. So, but all of that was data integrations, right? Like if you're going into conference season or you're going into like an event management process, there's data providers for that. Like Corpax is a common data provider for events. There's Wall Street Horizons is a very common data provider. Like VA has different events, data sources. Bloomberg Events is another common one. You touched a little bit on consensus, like Visible Alpha. They have great coverage in terms of forward-looking estimates. FactSet has similar product. InSync as a product. Bloomberg, again, is kind of in this space. There's then your internal notes of like, how do you capture that internally, whether it's in OneNote or Word or Microsoft, Evernote. The model's doing a good job of being able to like join your estimates or what you're saying, tie that to a KPI and taxonomy. And it's kind of interesting how you guys, I just hired a person that's head of taxonomy, to the Daloopa model, to what they're actually saying from a transcript, joining that against a fact set estimate for forward-looking, like multiple years out or multiple quarters out, with an events database of knowing when earnings is. That's just a lot of organization and structure of data. I'm curious from your perspective, if it's no longer about like the UX and building the UI for that in a browser or a tool, but the data integration of these different sources, maybe Daloopa expands out horizontally to some of those, or maybe it's just combining with other sources that are just experts within that space with really high quality. How you think about the need of being opinionated around which of those data sources to work with? For example, like I see FIS kind of has a specific source for fundamentals, a specific source for actuals, a couple other like data providers that are opinionated. Do you see that being something that a company like Anthropic is the curator of? Do you see that in the future there'll be specific research systems analysts that are more the curators of what's the best data source for these different systems to be exposed, maybe through MCP, maybe through something else, to figure out what is the optimal combination of all of the information that you need to describe the workflow that you just very eloquently put together?
Yeah. So I think in general, there's 3 data sets that are non-negotiable for a perfect agent to work. And we're not there yet, but there's 3. The first one you need is fundamentals, which Daloopa solves for. I'm proud to solve for it. The second you need is pricing data, like true pricing data, right? It's very hard to get. ICE is probably the biggest owner of pricing data, but there are other guys who own it. Bloomberg is one of the best at cleaning it up and distributing it. And, there are pricing data sets that only Bloomberg has and nobody else does. And pricing data is super, super important because I want to say 70% of analysis out there probably rely on some version of market price of a security for any type of analysis. And the last piece is actually internal data, right? So, for instance, when I mentioned the conference season problem, there are 2 types of transcripts that get generated in conference season. There is the CEO goes on stage, talks to a group of people, and it gets transcribed by, half a dozen providers, and you can license a transcript or you can dial in yourself and listen in. There's that. And then there's also the one-on-ones. You go to the Hilton Hotel room 713. There's 4 other analysts there with you. You get 30 minutes with the CFO. Each person tries to squeeze in 3 questions. There's that, right? That never gets transcribed. That is you furiously typing it down, but it's also your questions that you're asking the CFO of the company. It's the only time you get to ever talk to the CFO of the company that quarter. The meat is usually in the one-on-ones because you're asking your questions, right? You're trying to figure out how to model something. That is the thing that, in my mind, needs to go into the model. Whereas when you hear the CEO go on stage, because they just finished earnings, he was just on an earnings call 3 weeks ago, a lot of the content is repeated from the earnings call, unless there's something dramatic. It's usually non-material versus the one-on-ones that you have. That's where you can really put the pencil to your model, sharpen your pencils on your model. So there is no automation for that piece yet, right? There is a decent amount of automation once a transcript is made available for the CEO's public address, but it's all the other tiny hotel room conversations that we want to solve for that I think is worth solving for. So if we can get the internal notes solved for, integrated into an agent, Daloopa's data integrated into an agent, and all securities pricing data integrated into an agent, you have a large language model sitting on top and orchestrate. Then it's, in my mind, it becomes the next level of what an AI agent is in our space. The possibilities are then truly endless.
Mm-hmm. I'm curious what your thoughts are, and we touched on this previously, about the concept of a security master, where there's a single source of truth that defines the relationships a priori amongst the entities and instruments that are being made available via that pricing master, the internal notes, and the historical actuals. Do you see a need for a security master? I guess equities is a little bit easier. It gets more complicated once you go to other asset classes. And we are right now just talking about equities.
Yeah. Equities is frankly much easier. Right?
Yes.
Like for the most part, any changes in equity are so uncommon that you just manually edit it. The securities kind of go forever unless the business goes away. But
there's always like a restructure, like Facebook becomes Meta, or there's an S1 filing, and when does it go public, and corporate actions that when you're dealing with pricing, having those historical corporate actions starts.
Yeah, but you can manually do most of it, right? Like Facebook becomes Meta once. The Liberty Complex is the biggest culprit of security master damage, but outside of that, you can manually adjust for most things. It's when you have options and they roll, and futures and they roll, and all sorts of derivatives, and you have, IG bonds gets issued every 3, 6, 9 months, and each bond then has its own role. Some bonds get rolled into one. You have distress exchanges. Like that's where security masters become problematic. At least for now, we are not really solving a problem with securities, if you think about it, right? We're trying to solve the problem with the workflow of research, like building a model, writing research, communicating to your PM, building more models, communicating better, writing more research. That's sort of the problem we're solving. Obviously in finance, there's this whole other world where it's trading and security and matching and all of that will require security master. Frankly, it's complicated enough that I don't really want to touch it. My customers also don't require that I do touch it. The only thing I will add is it is pretty neat that you can actually generate security masters on the fly. I've tested it a little in the background, but the idea is a perfect security master is difficult to do. In the same vein, a perfect taxonomy is difficult to do for fundamental data, because if you start with a template, anything that doesn't fit into a template doesn't fit into the template. So you need to keep adding to your template anything that doesn't fit in, which then means that your template keeps growing. So security masters only get larger, they don't get smaller, right? But at some point, it gets so large that it's unusable. Same thing with taxonomy. So how do you then build a taxonomy and prevent the problem, or build a security master that prevents the problem? You do it on the fly. Anytime you need it, you do it on the fly, and then you have an AI build in, and then take the newly created security master and match into whatever your old one is. So it's almost like creating a graph that's constantly getting created on the fly. Is it possible? Yes. Does it have errors? Also yes, which is obviously a big problem for security masters. So it's a bit of an unsolved issue right now.
Definitely a challenge.
Yeah. But you know what? Yeah. Human-based security masters have errors too.
Oh yeah, they have errors all the time. All the time.
Yeah.
And just having a AI augmented agent that can help you identify changes within the security mesh or something that potentially looks wrong, and no longer your archetype user is a research analyst, but it's somebody in operations or middle back office, or even somebody in trading that has to keep the OMS, whether it's ES or Infusion or AIM, updated with like the correct field so that it flows through to Shadow Nav or flows through to a fund admin.
And the errors come from everywhere. I'll tell you one of the funniest things. For a moment in time, you couldn't find Disney on Edgar. You could only find the latest quarter of Disney on Edgar, and it happened for a pretty extended period because there was some error with the Edgar backend after Disney acquired Fox that screwed up the security master. So you couldn't find historical Disney because it just went missing, right? So even perfectly tuned systems like Edgar, I mean, Edgar's front end is its issue of its own, but Edgar's back end is pretty good.
Yeah. And
even that breaks.
Yeah. I mean, there's a lot of requests a day, and a lot of people are hammering it pretty hard. So like whatever they're doing there, I know, I think Matt Levine had an article about them redoing Edgar, but for whatever it was built on, it's definitely stood the test of time.
Yeah, and it's robust. I mean, it goes down once in a while, but it's pretty robust.
All else considered, and I don't know how well it's funded, but like nobody's making like hedge fund engineering money working at Edgar. So like the team has definitely put something together well. At least I don't think they are. I wanted to touch on another partnership that you guys have, and that's with OpenAI. So like, not just specifically on the Anthropic work, but also like I saw on LinkedIn, you were posting, oh, by the way, we're not just on Anthropic Enterprise, we're also available on OpenAI. So how did that come about? Like, and it seemed like it happened relatively quickly. And I'd be curious, like, what's it like working with the two kind of behemoths in the space? Like, is there different similarities? Anything that you have there?
Yeah, the main differences are we actively work with the Anthropic team. You know, we share ideas, we sit down for meetings together, we meet them in person, like all of that stuff you expect of working with. OpenAI is just more of an integration right now. We have not actively worked with the team in like the way we do with the Anthropic guys. There is also no OpenAI FIS product, if you will, in the same way like there is now Claude for financial services. That doesn't exist for OpenAI. We are just integrated into the enterprise version of OpenAI. So it's a bit more like with Anthropic, we are working together. With OpenAI, we're just participating in the app store, if you will. So I might not be the best person to say what are the key differences to working with them, but I think Anthropic's obviously been very open to wanting to build verticalized products. They've had a lot of success with Claude Code. It is a phenomenal product, like one of the most insane pieces of, I guess, software, if you want to call it, I've ever used. And they've really thought of the world as a, hey, I need to be an enterprise company. That's where the juice is at. How do we be an enterprise company? How do we think about the compliance issues, the security issues, change management? I was on a call with like my partners in Anthropic this morning with a potential customer, and they basically say, look, I understand change management is very difficult at a bank. We will send people to help you. We will literally have people in your office working with you, right? That's the type of enterprise attitude that you expect out of anyone who sells into a large investment bank. And I was pleasantly surprised that, you know, big software company, Ivory Tower, all of this stuff was willing to do something like that. Very old school NetSuite, Oracle style work. They're willing to do that. That's sort of the spirit that we see with the Anthropic guys, like a focus on building out Claude for Finance as its own verticalized product. They don't, you know, there are a lot of little startups, well, some of them not little anymore, but there are a lot of like AI startups in our space. And I think the Anthropic team looks at this and be like, yes, these companies are not like the behemoths yet, but it's still worth investing in this space. Whereas I think it's very easy to look at this and be like, you know, you rarely have companies break unicorn status in this space. Like the juice is not worth the squeeze, right? So that's sort of the difference. However, OpenAI is obviously first to market. They're much bigger than Anthropic. Most people have personally used ChatGPT, right? If at this point, probably everybody I know has used ChatGPT or is a personal subscriber of ChatGPT. They have more enterprise customers, even in finance, than Anthropic does. Remember, totally. Anthropic for Finance is a 2-week-old product. ChatGPT has APIs embedded everywhere. People have bought the enterprise version. So, you know, as Daloopa, we have to also work with everybody who's integrated with our customers. Our goal is to meet our customers where they are. I love working with the Anthropic team, but if my customers are going to be on Enterprise ChatGPT, I've got to be on Enterprise ChatGPT.
Totally.
Right. So that's how we think about it. We are starting to see a lot of people say, you know what, there's no reason to be on one or the other. This is not like you're either on Windows or a Mac kind of situation. And if you're on one, everybody needs to be on one. This is more of a, why can't we just have both type situation?
Totally.
Right? On the buy side, that's been widely adopted. Like every fund that I talk to is now at least an API customer of two of them. And it's not just Anthropic and OpenAI, right? There's also Gemini, there's also Grok. Like what I see a lot of hedge funds do is they basically look at the benchmarks and they say, hey, let's go find the finance agent benchmarks and just get the top 5.
So we've done a lot of integrations for asset managers, hedge funds on their AI. We focus a little bit more on the data infrastructure. One of the benefits that OpenAI had early on is its integration with Microsoft Azure and its integration with M365. So if you wanted to say like, hey, we want to figure out AI in 2024 and you wanted an easy button, you would press, well, just get M365 Copilot and it would show up with a little plugin on your Word, PowerPoint, Excel. And then what they also had was the intelligence services would make OpenAI easily integratable for anyone that had Azure. So pretty much any M365 customer in a fund, which means you have Office, which is everyone, has some sort of Azure relationship, and you can use that without going to Google Vertex or to AWS Bedrock and getting a new account or new cloud relationship. And so that actually gave them a great head start, I think, in the enterprise. I think they still have that. But for a fund that's comfortable like working with a GCP environment with Google or with AWS, which isn't a high barrier of entry, it starts unlocking kind of like a whole new suite of tools that you can get with, for example, Anthropic FIS through AWS Bedrock. And I also see the same thing where there's people see benchmarks like, hey, I'm not getting the juice out of what I wanted with Copilot. People are still saying I can do this great stuff. They'll watch this podcast. Like, oh my God, I want exactly what Thomas just described. If it's not like button press ready within Azure through Enterprise ChatGPT, but it's suddenly available with AWS, and all you have to do is just subscribe to the normal enterprise version in Marketplace. It's not that there's not a big moat there, is I guess what I'm getting at. And so one of the things I was touching on is that when people are using Daloopa with Claude Financial Services, there's a couple different ways that people can access it. Like one is through Claude Desktop. There's also like the browser, and then lastly there's Claude Code, which I think is kind of an interesting pathway or maybe a little bit different customer base. How do you see like your customers, like your initial customers right now that are consuming Daloopa over MCP within Claude using it? What tools do they tend to be using most often?
Yeah, so if you buy Claude, which is the agent, then Daloopa and Claude Finance, then Daloopa is natively integrated into that. Obviously, you have to do commercials and all of that thing with both of us. But from the end user's perspective, they get a login, they're good to go. Most funds are not really doing that, though. At least the funds that we service, the big multi-managers, pod shops. Most of them are just buying the API. Right, so then you're not buying Claude, you're buying like Sonnet or Opus, which is the model itself. And then what you would do is you buy our MCP and you integrate our MCP into their API. So basically all you're saying is we don't want the Anthropic's front end, right? We don't want your website, we want the technology. And the reason you'll say that is because either A, you want to build your own front end, which a lot of these guys do, or B, you want to build other types of integrations before you even build your own front end. Right, you want to layer in some compliance thing, you want to layer in trading data, risk data, internal memos, like all of this stuff you want to layer in. So we see a lot of guys going down that route. Then you just have to do the integration on the back end. Because we are now pre-integrated with Claude, it's also very easy to integrate the APIs because guess what? Like in the background, we're just integrating APIs anyway. Right? So if you were to do that work on your own, it's also quite easy. To your OpenAI point, you were absolutely right. They had like this huge head start because of the Microsoft Azure relationship that like really pushed them out there. But what you start seeing a lot of people say right now is that is not the barrier to entry is not super high. For another LLM maybe, but for Anthropic to come into the conversation, like that barrier to conversation is relatively low. These conversations are happening at a very, very senior level. That's the thing that I think as, a small company like Daloopa, we're not used to seeing, which is just we are just getting dragged into rooms with very senior people because very few companies are thinking about this as, hey, let's let the groundswell work its way through. The groundswell has worked its way through. Now it's time to get serious. Are we doing this or not? Are we creating AI capabilities for our people, or are we not going to do that? And if we are doing it, let's do it in a proper way. Let's evaluate all the vendors. Let's figure out who's better. Let's have a measurable metric to figure out, is ChatGPT better? Is Claude better? Are they good enough without the Daloopa integration? Do we need the Daloopa integration? How do we measure everything? And what really changed in the last 6 months is people got very good at measuring LLMs. It seems silly, but 6 months ago, what we saw a lot of people do is, hey, how do you feel about the output? Is it good? Is it bad? Did you notice mistakes? There was no like quantifiable metric. But as benchmarks got more mainstream, people started realizing, hey, you don't just have to benchmark pure quantitative stats. You can benchmark qualitative output. So what we started seeing people do is they create a whole list of prompts, and they will type the exact same prompt into every single agent. I would integrate ChatGPT with Daloopa. I'll run it on ChatGPT. I'll run it on Claude. I'll run it on Claude Daloopa. And I would just have the output, and I'll have people rank the outputs, right? 1, 2, 3, 4. You just keep ranking them, and then I sum it all up, and then ultimately I have a benchmark, right? So people got more comfortable with the idea that using evaluation prompts is the way you evaluate the product, as opposed to in the software world, you don't do that, right? You evaluate it based on, does it solve this problem? What is the total time saved? So we see some companies still use the old method of buying software. What's the time saved? What's the dollar created? What is the business dollar amount that we are able to create for us? And that's probably 50% of our customers. And the other 50% is like, AI is an enabling function, so it's less of how much cost I save and what's the direct line of sight to a cost reduction, but it's more of like, what can I be doing that I previously have not been doing? And frankly, I'm willing to take a bet that there are use cases that I haven't even figured out, but someone's going to figure out in like 2 weeks, and it will add a lot of value. So like, let's just swing, but we just want to pick the best one, and we're going to use benchmarking to figure out which is the best one. Mm-hmm. So the motion of buying AI is actually quite different from the motion of buying software. And we're seeing this shift in how buyers are changing.
One of the things I'd be curious about is a firm that doesn't have AI and they were to start having a well-organized way of combining something like a FactSet, something like a Daloopa, something like a Bloomberg for being able to enrich other attributes on the company, exposed in a thoughtful way with MCP or any sort of like tool function calling, whether it's Grok, Claude, or an OpenAI model, I don't think it's going to matter. Like all three of those are going to rip relative to what they had before, and even like relative to each other, it's going to be far more driven on the quality of data that's going into the model than like the minute differences between the model itself. Assuming they all have like. They're all like state-of-the-art models. They all have reasoning built in. Mm-hmm. There's not, at least in my experience, going to be that much of a difference relative to the difference will happen when you have very accurate, high-quality data sources going in.
Yeah. The latest round of benchmarks, so Llama standalone, open source from Meta, for finance, it's about like a 25% accuracy, give or take a couple of percent. The latest version of Claude, which is Sonnet and Opus. Opus is slightly better than Sonnet. Opus is about, I think, 47, 48, 49% accuracy. So 1 out of every 2 numbers are wrong. The latest version of OpenAI, which is 401, that is about 50%. So about a 2-point spread from Sonnet. When you integrate Daloopa into either OpenAI or Sonnet, you get 99, close to 99.9%. So the spread with Daloopa into a large language model is 3 times as much as the spread from the best large language model and the worst large language model.
Totally, because otherwise it's just doing token prediction with very little context to base that off of and hope that the training data set was in some way weighted correctly. That's so right. That the token prediction for when it's going to say with like next quarter or like last quarter's EPS is actually correct. Like it's almost not even a fair test.
That's right, yeah. And for those who's not in the AI world, the way I'll explain this is if you had a really smart analyst and an okay smart analyst, and you told both of them to go predict, or told both of them to give you the historical data for Walmart, the really smart analyst might be slightly better, but he's still not going to get close to the truth. But what you should be doing is just give them the financials or give them the model and now ask them the same question. And you really very quickly realize both of them immediately get to 100%.
Totally.
Right. So that's what happens when you use data to augment intelligence.
Yeah.
Intelligence is important, but it's not the only thing that gets you the perfect answers.
Yeah.
You still need the answer key.
Well, and I think that because of that people sometimes don't appreciate the actual intelligence that these models are capable of, because they're assuming that it's both intelligence from being able to see information and then make a deduction or synthesize that versus being able to also produce the information on the fly and then synthesize and deduce. And so when they ask a question to a model and it gets something wrong, 50% of the time, like, yeah, sometimes it's right, sometimes it's wrong, that they don't realize that the actual intelligence part of it, where it's synthesizing, is actually very strong. It's just it didn't have good information or context in order to actually make a decision off of. And people don't have a good job of attributing those two different, or decomposing those two different pieces. And because of that, I feel like models are actually far more intelligent than most people give it credit for.
Agreed.
They just don't appreciate the importance of context creation.
I fully agree. Yeah, the models are way more powerful than people realize that they are. The problem is that they're completely hamstrung by the fact that they don't have enough data to get you to the right answer.
And they also don't know what data they need. So like to some extent, they don't have enough data, but at the same time, they don't know that they need the data in the first place. And they also don't realize that data needs to be contextualized for the model to interpret it appropriately. And that's like this new skill set, this new muscle that people are starting to realize. They're using the tools most often. People call it context engineering or prompt engineering. Yeah. But that is a true skill set, and it is a true understanding that I think everyone that wants to be effective within like using AI, whatever their domain is, asset management, financial services, whatever, needs to start acquiring. Otherwise, you can give them the best models in the world. They don't know how to actually use them.
I actually disagree with that. I agree that prompt engineering is a critical skill today, but I actually think it'll be a useless skill in like 24 months.
Well, I would argue that what do we consider prompt engineering? Because I think either way, there needs to be a clear articulation of what good looks like and what the outcome is so that the model has the right objective function or pathway to be able to take. But the hacks or the way of using certain terms in order to manipulate the model, I think that will go away. Over time go away. But there still needs to be a clear articulation of a problem and the context in which information needs to be used. Yeah. But I think that a lot of people are not nearly as good at that as they think that they are. A lot of people can identify when there's a problem, but are they good at actually describing what a solution is in a very articulate, well thought out email and then sending that out to multiple people on their team to go and execute? That's actually a hard skill to acquire.
It's just like if you went to an AI agent today, best AI agent, the agent doesn't exist today, and you say, should I buy Walmart stock? And the output is not great. And like, it's not because the output is not great. It's because that wasn't a good prompt.
Totally. It was like the input wasn't good. Like your inputs and outputs are still going to be a function of it. The quality is still going to be a function of the two.
Exactly. Yeah. That's like a weird prompt. Like you don't expect to go to a PM and ask him that question. You have to give him some context under what risk parameters for how long.
Totally.
Like, what type of investment strategy do you have? Is my grandma asking me if she should buy Walmart stock, or is a long short market neutral PM asking me 4 minutes before earnings prints? Totally different type of question.
100%. And like there's dozens of different answers to that one question. Yeah. But if it doesn't have the context, it's got to guess something.
Yeah. And then you're like, well, that's not the right answer. But like, yeah, well, you're a PM walking into Walmart earnings and is giving you the answer for a grandma. So
exactly.
That I agree. That prompt engineering you absolutely have to do. But the kind of stuff is like, oh, you are an professional investment manager. Discuss this, and like that should all go away. With especially the more proliferation of memory in people's accounts, like all of that goes away.
Yeah, but I think that there will be context engineering that. I think that what it looks like today will look different in the future, but I still think the way in which the model has context, whether that's in the initial prompt or what is being supplemented into the prompt with additional context, whether it's memory, short-term or long-term, that is going to be a skill set that only gets more important. And at Citadel, we had this role called research systems. So you would have these people that were kind of on like the the COO kind of track that would sit between the investment team and technology and help them think about their process and kind of fine tune that. They might be sector specialists. And there were some awesome people that would do that. What I see their role in the future being not sitting with the PMs or how they use the technology, but looking at the AI, understanding how it's making decisions or how it's providing feedback and context, and identify when is it good. Like they're doing evaluations constantly on the fly, and they're looking at real use cases in an evaluation type system, and then being able to identify gaps, figure out how do we improve that. Is it enhancement to a model? Is it a fine tuning of the model? Is it better context? And constantly improving the context, fine tuning, and the prompt or whatever that looks like in the future. And they're the future of like research systems or AI systems within a fund. And it's not always going to be people writing code. They have to understand the domain. They have to understand how the model works, what context it's using, different tweaks or parameterizations you can have around it. And then constantly tuning that. Eventually, that's the model itself kind of doing that. And then somebody kind of oversees that. But the future of whatever Citadel's old research systems looked like in like 2023 and before is going to be more focused on how is AI proliferating and used from like a 2026 and beyond. It's not just within that one firm. It's going to be within many firms.
Yeah, I think you're right. I think what we've seen across like a lot of our customers is some of them think about it differently. Some of them think of AI as just, it's a really powerful summarization engine. I can summarize, sell-side research reports, earnings transcripts, and all of that. And there are guys who's basically saying, well, a hedge fund only is a real hedge fund if I have processes in place, and this is process automation at its limit. So how do I think about my entire process? Yes, it has benefits for email writing and summary. Yes, it even has benefits where it could replace some of the analytic workflow that my teams have to do. But let me rethink process. Now you're telling me that I can summarize 150 earnings every morning. Previously, that wasn't possible. What does that mean? Who needs to know that? Right now, you're telling me that an associate that walks out of conference season for all of his or her one-on-ones can have my entire company's models updated within 15, 20 minutes. Who needs to know that, right? The ability to crunch, gather data at super large scale in next to no latency changes a lot of processes that previously you wouldn't even have built because it wasn't possible.
Totally. And like, that's not just your models. Like, what are the outcomes of those models? Is it a buy-sell rating? Is it a buy-sell rating with a level of conviction? Is it a price target? Is it a price target with a date? And having the inputs of that price target actually be formulaically decomposable based off of quantitative components of your model and more qualitative themes that can be summarized or generated across your entire coverage universe starts connecting not just the research component, but more of the portfolio construction side. 'Cause it's not that difficult once you turn that into a price target or you turn it into a buy-sell rating to take a risk overlay and look at the liquidity within the name and start suggesting paper portfolios. And that's not the AI coming up with some theoretical portfolio sizing. It's usually just using best-in-class tools, well-defined processes. The same way they have well-defined research processes, you have portfolio construction processes, hard risk limits, and turning that into a paper portfolio that's not a big jump of taking that paper portfolio, making it a cash portfolio, integrating with an order management system. Within that OMS, you then have it flow through a shadow nav or a back office accounting system. Like all of that stuff gets drop copy trade files, flows into your fund admin, flows into your shadow nav system. Accounting then looks at recs. They make sure they have correct end of day pricing. The process that you then do to be able to strike a nav, make that available internally, send out end of day performance reports, make that all updated in real time. Update the OMS system with a wipe and load so that it now has start of day positions. And all of those last like back office components are that entire life cycle that's not rocket science. There's nothing there that is overly complex, and it's a well understood machine.
It's a process.
Exactly. It's all process. And then you connect the research component, you connect the trading element with the risk overlay, you connect that to back office, you have that integrate with like your common third-party tools. Because the other thing that's really interesting is I've gone into my experience with Hedgineer, like all of those vendors that I just said are the same. Like in terms of people's order management system providers, like the same way they might have a couple providers for actuals, like most people trade with Flex Trade, maybe Bloomberg AIM, Infusion OMS, maybe Charles River, especially within equities, and that's pretty much everyone. And then like their Shadow Nav system, it's Infusion, as also people will trade with as Castle or as dedicated, but then like the back office, Infusion, it's Arcesium. Like if you're a new fund, like it's crazy expensive, but like you spend $1 million, Arcesium has a team of people in India. They then do all of your Shadow Nav and accounting, or Infusion does an awesome job, a little bit lower price point. Fund admin, everyone for the most part uses Morgan Stanley Fund Services or HedgeServe. And then for pricing, like Bloomberg's a popular one, but there's a lot of other great companies. We had Christina with Data Bento like last season. There's plenty of providers, but like those integration points, they make an MCP server, you have some data quality checks, the AI is able to integrate with it, understand it. So those same processes that you describe on the research side, it's not rocket science to integrate to the middle back office. And then you have a system that starts looking at the whole thing, and it can go
for
and
equities.
inspect.
For equities,
But it's not like that crazy. Let's say if you're trading credit, whether it's a bank loan or a corporate paper, or you're trading rates. Let's say you even have something complicated where it's like trading on swap, or it's trading like a derivative. Like it gets more complicated, but like it's not rocket science. And sometimes like the opportunities to use AI in the back office for trade reconciliation, for doing confirmations with brokers, like short locates is always a problem for our clients. Equities is straightforward, but short locates in like more complicated asset classes. But all of these problems, it's not rocket science, and they have to follow the same types of processes. And the benefit of that, it doesn't really matter whether, like if you have to strike a NAV, doesn't matter where your asset class is. Like you still, it's a similar process.
It's a requirement. Yeah, that's right. I would say change management does differ, of course, down depending on which part of the security chain you are, and what security you are in. Like change management for an OMS famously next to impossible. If you start a hedge fund on one, that's it.
I don't think that's true anymore. Like we've done a couple migrations from ES to Infusion. And once you do one, that's the other benefit of like you do a migration, you store the metadata about like, hey, what's the way that ES or Infusion handle the fixed connection? Like what is the difference between the security master? What are the APIs that Infusion has with the REST API in order to, as well as like their bulk load API, as has not quite as good of APIs, but the way that you extract it, like the way that the drop copy files are slightly different between the two. ES has their own security master, Infusion has their Infusion ID. Like once you do that one time and you store documentation around it, you use a language model to say like, hey, this is how you do a migration between ES and Infusion. These are the questions you have to answer ahead of time in terms of how because each client has their OMS configured slightly differently, but the actual semantics for doing integration and migrations, when you're using AI to handle that, actually the barrier of entry drops so dramatically.
I had not realized that. I mean, it makes sense, but I had not realized that.
Yeah.
It actually does.
Yeah. So like what we do is we're huge users of Claude Code. So in the same way that you can use Claude Desktop or through the web UI, with Claude Code, like it started with being really good at generating code. But the interface, the way that it does a REPL, it reads the input. The input could be an initial prompt. It then executes that using the tool. It then prints it out so it can see it, and then it loops. And so if we have documentation around an Infusion OMS API, like the Infusion API, we could then include that within the prompt, give it a tool that's read-only to scan the Infusion API, iterate over every single endpoint, pull down all the different reports, look at the different fields and configurations that it has, then tell me what of all your instruments. And so like you just kind of let it go and you watch it just rip through full documentation understanding of a fund's Infusion instance. So okay, now we have a prompt that also says like, hey, this is how we do a migration of Infusion to ES. You then put that template in and it generates what the upload files would look like to push into ES. And
I did not realize that, but that's right. Because part of what makes migrations difficult, at least on the implementation side, is you got to go document to document, and you got to documentation to documentation. You're going to map everything.
Totally. And like using Anthropic for doing these migrations starts putting that barrier of entry closer and closer, not to zero. Like you still need somebody that has an expertise, not necessarily like this is another level of expertise, right? You have to know the right things to ask and understand of doing an OMS migration or doing a fund admin migration. But like once you go through that and you have people that are kind of experts in that domain, using these tools to horizontally scale that suddenly become incredibly powerful. Like I would never do an onboarding of a client without using Claude Code. Like we have in all of our contracts, there's a requirement because there's a requirement for us to be able to use Anthropic Claude Code on top of their data. We'll do it within AWS Bedrock or through Vertex with GCP. So it's done in a very secure way, or we'll use our own APIs. But I can't do a migration without being able to use some of these tools. Specifically for us, it's Claude Code, because the idea of having an engineer or like a domain expert scan through their order management system, all the different securities that they have, like all the different custom fields, translating that to another third-party system, like is somebody that's trying to build a company, like that's just not tenable. All you do is just throw bodies at that problem, and it just doesn't work. But being able to retain that knowledge, document it, and then come to the table the next time you do an integration or a migration, it starts looking closer and closer to zero. And like systems like that handle these integrations start removing some of these walled gardens that exist, not just from a data provider perspective, where like if you look at Bloomberg, they have the walled garden of data where they include both like the data cleaning and vending, but also the data consumption. So like they're also the UX of it. So they try to keep that all contained. You see similar types of walled gardens in like the order management space, a little bit on like the fund admin side, but they've all at least done a really good job of making APIs available. And so then the opportunity for us is then like, how do we understand these APIs systematically across the board? Because there's only so many of them, and different funds have different combinations of them, that you break down like that barrier in like the middle back office as well. And like the same thing that you see Claude FIS doing magic on the research side, like we see like the magic really happening in my world in the middle back office, which is why sometimes the security master becomes important, because I want to be able to connect a instrument, or let's say I have an option and it's on like the underliers, like let's say it's an Apple option, underliers on Apple. You're doing research on the issuer. It's on Apple Common, right? But like the issuer is actually on Apple. All of your research is actually on the issuer, not on like the Apple security. It's on the company. And the bridge between like the instruments and some of the like more complex components in middle back office and the front office research world happens at the issuer layer, and making sure that like these relationships are always right, for me, just like pushes me more towards like saying there still has to be a security master to get the full unlock, because it's so close right now. And we're not quite at the point where we can just let the sec master go, even though like it is pretty close, especially if you look at it in just one context of the research world.
Yeah. I the question is just, which gets there faster, right? Being able to spin it up on the fly, especially like equities, is much easier.
Yeah,
right?
yeah.
Like equities is much easier. If you can do it with equities on the fly, then you can reason that you can do it for credit. And you can do it for credit, you can do it for derivatives and so on the fly. Are we there today? I don't think so. But can we also use, Claude Financial Services to like end-to-end soup to nuts build a model? Not yet, but we'll get there real soon.
Totally.
Right. And I would argue trying to bet against the speed of which AI is gaining capabilities is generally not a good bet. It's much better to bet on where AI capabilities could go, because if you're wrong, you're probably wrong by like 3 to 6 months anyway. I'm like, boo-hoo. We'll get there.
I'll wait, sleep on a beach for a little bit. Eventually the rest of the world will catch up.
Go solve some other problems. The real question is like, what problems can you solve that needs to be solved in this new ecosystem? And we are literally watching Innovator's Dilemma happen in real time.
Yeah.
Right.
Like not to say that you're contradicting yourself, but like there is a challenge there as an entrepreneur, where like earlier you were saying we meet our clients where they are. And there's this other element of saying like, hey, I'm building for where they're going, because they're not there yet, but they know that they're going to want this in the future. So we're betting on AI, and it's eventually going to be there to pick this up and run with the client. Yeah. How do you, as like the CEO, co-founder of Daloopa, kind of bridge that gap? How much you build for the future that's not quite there yet versus you build for the demands that they have right now, and hopefully you don't get sunset along the way.
That is a very good question. So if you look at how our company is set up, right, we have research and we have product. So product's job is to solve problems for our customers today, right? You got to save your customers time. You got to get them to decisions. You got to do that right now, if not right now, within the next 3, 6, 9 months, right? Product has to operate on there is something that we need to deliver. Well, if you're going to deliver a product to our customers through the integration of data into their workflow, then it should be in their workflow, right? So my comment there is a product comment. But 6 years ago, we were born as an AI company. We still are an AI company. We've started training models 6 years ago. We continue to do that. We continue to do research. We don't publish, maybe we should, but we don't publish our research right now. They're all internally consumed. But what we do is driven by the outcomes of research that we conduct. So I have 2 co-founders. One of them is our chief research officer. He does all the research for us. And research is going to where the puck is going to go, right? It's important for us to do research around what is possible today and what could be possible down the line. And based on what we figure out in research, we can then hand it over to the product team to productize to then put into the workflow. I'll give you a real example. 3, maybe 4 years ago, we had this hypothesis, a crazy hypothesis, where we basically said, you know what would be crazy? If we can update a person's model at a click of a button. That would be crazy. And we quickly realized that the conditions to do that is it's got to be next to instant, and it's got to be error-free, completely error-free. It's just like, how in the world are you going to do that? Because rarely do you have speed and accuracy work together, right? You want something fast or you want something right. You never have both. And so we were like, well, let's do some research. And so we started doing some research. Some research led to a lot more research, led to training models, doing more testing, doing a ton more. And then we realized, you know what? It's actually doable. It's totally doable. And so out of that was born this product that we call the auto tagger. And what the auto tagger is able to do is from the point a company files a press release, not even the AK, the press release in the wire, we're able to catch the wire, extract out all the data, map the data in real time to all my customers' models in all shapes, size, and funkiness, and immediately update it. So sometimes this happens, and not just sometimes, it happens all the time. Before the AK even renders on Edgar, my customers' models are getting updated. Right? So that's not something product managers can sit there and just create, because that requires technical breakthrough, right? True backend breakthrough. So we need a research breakthrough skating to where the puck is going to go. And then the product team needs to look at that research breakthrough and say, how do I take this breakthrough and put it into my customer's workflow to solve maximum problems? And what they basically said was, we have a very simple solution. What if the customers clicked a button and their model just updated? And that's it, right? And we just let the backend handle everything.
Awesome.
Yeah, so that was a function of research. We continue to do research today because, we can do so much stuff. So our product vision, our research vision are not aligned at the same time frame because, obviously they shouldn't be.
Totally. On the 8K, we'll go on like a tangent on this, but if you want to get it before Edgar, there's a couple paths that I'm aware of. Like 1, you could subscribe to Newswire. 2, you could be polling the IR website. Or 3, you could be polling Edgar. What of those 3 do you guys do?
All of them.
All of them?
We do all of them, and we go to the first source. In fact, we go to every source, and we use them to cross-check each other, but we will always catch the first source. We catch them all. So we pull every wire, we pull every IR website, we pull every exchange, we pull every regulator in real time, everywhere around the world.
That's awesome.
Yeah.
How big is the company now?
In terms of people, we're about 400 people, including our data team,
awesome.
Our data service team.
That's so cool.
Yeah, we're pretty global. New York is relatively small, but we have engineers. We're a remote first company for the most part, so we have people everywhere, and we like it that way.
Yeah,
we work around the clock. Customers get service around the clock.
Awesome. So what are you guys researching right now? I'd love to if you can talk about it. Like,
sure.
What's next?
There are a few things that we're pretty focused on, but they all sort of fall under the same umbrella, which is, can you have AI work in Excel with no errors? Mm-hmm. So plenty of people have figured out how to get AI to work in Excel. It's not that difficult. Mm-hmm. The difficult part is, how do you do it with no errors and capture all the edge cases?
Yeah.
And that is really, really hard. Let me explain one edge case to you. If you look at a person's model, when they sum up two numbers, right? Let's say you're summing up, let's say you're calculating gross profit. Very simple. You take revenue minus cost of goods sold. Or if cost of goods sold is a negative number, you take revenue plus cost of goods sold gets you gross profit. Real simple. But sometimes companies will report non-GAAP gross profit. And the way you get to non-GAAP gross profit is that there'll be an add back. And so what some analysts would do is that they'll create a row with that add back number. And so they'll go revenue plus add back plus cost of goods sold gets you gross profit, right? Those two numbers could be negative, whatever. But some people don't do that. Some people will get to the GAAP gross number, and in that cell, so it goes equal cell A1 plus cell A2 plus a number, 1.23. Some people do that, and that's very, very common, right? If I were to use AI to update that model, or if I were to use AI to forecast that model out, I would now need to build an operating model based on your style. So if you have the habit of building a model this way, I need to keep building a model this way. There's a ton of like AI and Excel tools that look very good. Nothing comes close to solving problems at this level of intricacy. Now, the thing about our space is, if you don't solve the problem 100%, you don't have a solution. So our research is not on, can we get AI to use Excel? The answer is yes. Can we spin up a solid demo tomorrow? The answer is yes. But what am I going to do with 100,000 views on LinkedIn if I don't have a product to deliver? So, as we've always operated as a company, we're going to build a product that actually works, and then we're going to release it.
Awesome.
Right. So research right now is, can we soup the nuts, build a model, all edge cases handled?
Ooh.
Yeah, the edge cases is where the research is.
One of the things that I saw come out, and most people weren't excited about it, but Claude Code came out for Windows, and most Excel models are on Windows. And there's things that you can do if you're on a Windows machine that you just can't do on Mac OS X. And one of my favorite things, I've been a lifetime Python developer, is there's this library in Python called Win32com. It's only available on Windows. It was primarily developed by this guy named Mark Hammond. He's Australian. And if you used to install Python on a Windows machine, at the very end of it, it would say, "Thank you, Mark Hammond." Because what he did early on in Python was make all of the Windows, and him and a massive team, all of the Windows internals accessible to Python. And you could call out to all these like weird C DLLs and also COM objects. And so anyone that's been developer in Python for a long time on Windows, or a C# developer on Windows or VBA, all of the Excel integration was with COM. And a lot of the Python space has kind of gone on more Linux. And there's XLRT, OpenPyXL. There was like XL Wings, and there was like Data Nitro by this guy that was actually, I think it was Ben Lerner, and he now does a Snowflake optimization tool, but Data Nitro was pretty cool. Anyways, and so you can do a lot with Python on Windows, but you didn't have a lot of AI tools for Windows until Claude Code came out. And then with Claude Code combined with Win32com, you can create these objects that represent the live Excel workbook in front of you, and then have it go in as you're typing something out, see it in real time, modify like the active workbook, the same as you can with a built-in plugin. So we've been messing around with that internally.
I think we played around with that. We've at this point, I feel confident in saying that we've played around with every Python library that interacts with Excel. Like everybody knows OpenPyXL. We've been playing around with that. There isn't a single library that takes care of edge cases.
Yeah.
We have to create our own.
Totally. But I think that what's interesting is that like there's so much stuff in C# that was built around Excel. Like Microsoft, they've been pushing like the TypeScript API. They have like the Yeoman tutorial that if you want to build a TypeScript Excel plugin, it was very nascent. Like up until I want to say the beginning of this year, you couldn't use a Control-Z with a TypeScript API for Excel plugin. So people would use this new cool like JavaScript API, like, oh, now this whole new world of developers can create these tools. But if you created a UDF, a user-described function, if you press Control-Z, it wouldn't work. And so you had to use C# interfaces.
Yep. That's correct. That's why so many Excel add-ins, once you change something, there is no undo.
Yeah, which is
crazy.
I know. Like, how did they forget that when they're? I think that they've since added it in.
No, I think that's still true. You still cannot undo an Excel add-in based modification.
Yeah, I think I might fact check that one, but because I've been following the Excel team, and I think they came out with something at the beginning. Anyways, but they're just so far behind. And so, like, if you're doing real development in Excel, a lot of it is C#. It doesn't have to be, but a lot of it has been even up until right now.
The other thing is, like, I mean, we're getting really nerdy into the weeds here, but there's a layer where you interact with Excel that requires you to interact with the operating system. And you can make modifications to Excel. Obviously, you cannot make modifications to the operating system. So then you have to think of like really creative workarounds. There is actually one of our product that has this problem. So in Daloopa, one of the things we do a good job at is every single data point is source. So you can click any number that we provide you in any distribution channel, add in, Claude, whatever, and it always opens up the source, right? And the way you do that is very simple. It's just a hyperlink. You can insert a hyperlink to Excel many, many different ways, but you can only remove it one way. You can only remove it by removing it the traditional, like, hey, I want to delete the hyperlink way, right? I right-click, remove hyperlinks. The problem with a hyperlink is that it's very, very powerful when you want to use it, but very annoying when you don't. Because every time you click on it, it will open a pop-up. So how do you disable a hyperlink without removing it? Which Excel just doesn't support. There's no such thing as a hyperlink that's unclickable in Excel, but there is such a thing in Windows. So now the question is, our customers came to us and they were like, hey, we love these hyperlinks. We don't want to delete them because we want to still be able to use it. But when I click on a cell, I don't want to be able to just pop up something that's annoying, right? So solve this problem. And we're like, we'll go solve the problem. The engineers looked at it. It was like, this is a Windows problem. So we had to send it over to research.
Yeah.
And they had to like do operating system research on how to solve that. And we actually solved it.
Awesome.
We have hyperlinks today that you can disable and re-enable.
Yeah.
Yeah, we figured out how to right-click open hyperlink without left-click opening hyperlink.
Ooh, that's cool.
Seems simple,
yeah,
right?
Yeah.
It was
all
so
of this
much
stuff.
work.
There's other things like being able to have a Excel function that can spill. Like you go into A1, you write a formula, and it actually writes a table from A1 to like A4 all the way down to D4. They now have spill functionality natively. Which is actually really nice, but
it's very nice.
Just 5 years ago, let's say like 3 years ago, that spill functionality didn't exist, and it was a little bit longer. And so when we would have to build Excel plugins, we would have to spin up a separate process running in the background that would then write to that table because a user-defined function in Excel couldn't modify any cell outside of the one that it was actually in.
I do remember that, yeah.
And so all of these workarounds started being built around like the limitations of Excel. I worked with Excel's come out with Excel for Python, and it hasn't really like lived up to, I think, what the potential it has. I was the first person that actually installed the Excel Python plugin on their local machine by modifying my local environment, as I was like one of their test dummies. And I still think there's just such a powerful opportunity there for pushing Excel further. But it's also something you don't want to break, right? Like the last thing you want is to add a new feature and one of your biggest customers said, hey, all of my internal analyst models are completely broken. What did you guys do? Because it is also a very finicky beast. And it's scary to mess with.
It's finicky if you're like trying to modify it. If you don't modify it, it's super robust. And once you start truly understanding what Excel does, you realize that trying to like our AI problem right now is we're trying to teach AI to use Excel. And I'm a big believer in Dunning-Kruger. If you're not an extreme power user in Excel, you think teaching AI to use Excel should be pretty straightforward because like there's not that much you can do in Excel. But once you truly understand how people use Excel, you realize, my goodness, the amount of stuff you have to think about is mind-numbing.
Yeah. It's Turing complete. It's a full programming interface and a database.
It's Turing complete without VBA.
Yeah, totally.
It's
yes.
insane.
Yes. It's a beautiful tool, and like it does integrate well with the rest of the Microsoft ecosystem. Like the same object model I was talking about with Python also integrates with PowerPoint and Word and
which, by the way, is
SharePoint
Turing complete too.
All of them are. Like all of them are. That's
totally different conversation.
Which is even crazier. Like
absolutely
PowerPoint
crazy.
is almost more powerful than Excel, which is because it has Excel plus plus plus.
That's right. It's a visualization engine on top of Excel.
Yeah. Like I've seen some of the best product mock-ups are actually PowerPoint slides that they just, and you go into and you select everything and you ungroup it. And you're like, oh my God, like the amount of actual objects in this page
PowerPoint's
is crazy.
the original Figma.
Yeah, it is.
It is the original Figma.
It is. And they did a great job with it. They missed an opportunity there.
They missed the Figma opportunity. I don't know. PowerPoint is still standalone. It's probably still bigger than Figma.
Yeah, probably.
bigger.
But like, it would be nice to have a Figma also in the
suite. Yeah.
portfolio. Excellent. So, hey, Thomas, thank you so much. Really appreciate you coming on the podcast. And with that, I want to thank everyone for joining. This is kicking off an awesome season 1. Thomas Lee from Daloopa came on to give us like a whole run through of a lot of different stuff. I think we touched on some awesome topics. For anyone that wants to follow along, check us out on YouTube. Hit the subscribe to stay updated on the latest episodes and shorts. Also check us out on LinkedIn, Twitter, and we also are on Instagram. So until the next episode, thanks for joining in.